Fed fund futures from the perspective of they've been pushed way out into the future. And what we're looking at here this morning is whether we're going to have an actual breakout to new all-time highs as we're going into the end of this week. And we're going to talk a little bit about how that is possible when we're relating it here to DXY. We completed profit targets on the dollar's rally earlier this week, and then we broke extensions. And so there's the potential for a larger pullback yet again into another third full 50% retracement. And every time that there's been a dollar weakness trade that you can see here, despite it being in a longer term uptrend, the indices have had a tailwind. They rally as the dollar is making this pullback into support. And so with the extension failure, there's this potential 50% short from yesterday's highs to lows that we have above us. And if it defends and leads us back down into this larger support level, this short-term dollar weakness trade will send the indices higher. They will become more buoyant. They'll be easier for them to rally into their previous all-time highs. That was one component that we were looking at here as we were going into our morning. The second component was crude oil. And crude oil, CL, has run into an all the way halfway back short from a previous high that we had had on April 7th to our most recent lows. And then inside of that setup, the progression of measured moves that we had been inside of, where we had pullbacks that were defending, and then new long setups running to targets, and then next measured moves in our series, which then broke a 61.8% line as we were going into our morning. That crude oil strength trade breaking down also puts us in a situation where we have crude oil falling back down into, although it is a longer term support level, it's quite a ways below us. As crude oil falls, the Fed fund futures, the probability of a rate cut gets pulled into the future and the indices have a tailwind. And so those two components we were looking at in comparison to, or in correlation with, the VIX being inside of its series of traditional short setups that we had run into yesterday. And remember that the VIX was stick saved at its bearish below line in the sand for that big daily extension short. And however unlikely that this may seem, the targets are down at the 1708s. When you're looking at this from the perspective of the old contract lows to highs, yes, it's true that last week, Friday, we were running into exactly this long setup, and we had completed it and then actually retested our profit target yesterday, and then we fell and we're falling back down into our lows of the week. And so what we were watching for, even the bullish case for the VIX, is that it falls back down into its lows of the week. Well, that's the indices going to their highs. There is a little shorter term. There's a little intraday counter into resistance, and that correlates with the indices pulling back into yesterday's lows to highs. So if you look at the dollar has a short from highs. The VIX has a short from highs. Crude oil has a short from highs, right? The indices have a long from lows. And the gap fill is down here at the 71.42. Now there's one little issue. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.